and talk about one of your picks, which is United Rentals, which is one that caught my eye. Big equipment rental company, which had seen some rocky times over the past couple of years, right? As we've seen industrial and CapEx go up and down.
But when you travel to New York, you see the construction going on. And when you go around the construction sites, what do you see? Those United Rentals. You know, it has over a 40% profit margin. And I do think we need to employ common sense when investing. Is that not true? I mean, what's happened this year in the IPO market? Companies are coming to market because they're starving for cash. But when we put that aside, the Lyfts, the Ubers, Beyond Meat, there's some great companies that are very profitable, like United Rental, like Norwegian Cruise Lines. You can say, well, Lear Corporation is another example. They're not the Nifty 50, and I refer to the Nifty 50 as the top 50 stocks of the S&P. They now make up 50% of the S&P 500, but we see great values, and I think the market's shifting from that growth-oriented mentality to a value-oriented.
So if that's the case, we've talked about it repeatedly over the last couple of weeks, why is $1 trillion that's flowed out of equities over the last 3 years sitting on the side?
Well, why people make, short-term decisions, I really don't know. But I think the key issue is all investments boil down to a return of cash flow and the predictability of the cash flow. We've got political climate that people are unsure about. We've got tariffs. But I think when you need to put your political opinion aside and focus on that return of cash flow when you're investing clients' money.
So, Clark, can investors own a company like United Rentals, Norwegian Cruise Lines for the long term, or do you have to get the cycle right? Is this a macro call on the economy, or can you hold these things for 10 years?
Well, I think, as a portfolio manager, you got to use a combination of cyclical companies and also long-term plays in the marketplace. So I think it's a combination along those lines.
When you are investing and you're looking at a value stock, what are the metrics that you identify? You've already told us about United. What is it that stands out to you most? Are you looking at the dividend yield over the year? Is there something else?
Well, we run and manage Kendall Capital, independent fee-only advisory firm, focusing on the middle-class millionaire, which is $500,000 to $10 million. So those types of investors want to have peace of mind that we own a company that they can understand, they know what they're doing. So we do look at things like cash flow, price to earnings. I look at the companies in our portfolio, and 3/4 of them, the board of directors is using excess cash flow to buy back their stock in the open market. So I think that gives you great peace of mind. Compared to the IPOs, the board of directors are saying, we need cash, sell more stock in the marketplace.
So when you're looking into the end of the year now and you're advising your clients on what to do, we've definitely started to see this rotation that you're describing out of growth and into value. How do you think that clients should be behaving going into year end?
Well, I think end of the year, I think there's two ways to approach it. For non-taxable accounts, IRAs, 401ks, you strategically move from large cap growth into small and mid cap value securities. I think that's a great opportunity. Move out of technology, move into industrials, consumer preferences. For taxable accounts, use this as an opportunity to make donor advised fund contributions. The changes in the tax laws 2 years ago, basically less people are itemizing. And so what we are having people do is group their charitable contributions. If you make a contribution of $10,000 a year, do $50,000 one year and then to a donor advised fund, then spread it out over 3 or 4 years. Qualified charitable deductions is what I see middle-class millionaires are not taking advantage of. That's where you can make charitable distributions right from that IRA account and not have to fiddle with the RMD.
And do some good while you're doing it. All right, Clark Kendall, thank you so much. Kendall Capital CEO and President.
Thank you for having me.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.